Over the last 12 months, I think I've been asked this one question about literally 500 times, either on our Facebook page, on our YouTube channel, or directly from investors over the phone or catching up with them in person. And that question is now the right time to buy property? So in this video today, I'm going to unpack some of the positive things, some of the negative things about the Australian marketplace so that you're in a better position this year, next year, and into the future to start making decisions for your future. G'day there, my name's Ben Everingham and I'm the director here at Pumped on Property. Now, I'm going to talk about is now the right time to buy property, and in particular, where the Australian marketplace is at, where the Australian economy is at. I'm going to talk about some of the negatives and some of the positives. I'm going to talk about planning for this current marketplace and how you can take advantage of current market conditions as well. So what I wanted to say is that for the first time in a long time, we are now in a buyer's market. And that is because sentiment is really, really low. The media's been absolutely hammering property for a while. We're in an election year where a lot of people do sit on the fence. We're also in a period where it is still quite difficult to access money, although as ANZ Bank did a couple of weeks ago, they've now said that they're open for business to investors again. Interest only and principal and interest loans are basically normalised, and they're saying that people can put 10% deposits down again, which is something we haven't seen in Australia for at least the last 2, maybe 2.5 years from a bank like those guys. And I assume that as we go through this year and prices continue to decline in your Sydneys and your Melbournes, that money policy is going to change slightly. APRA's going to take that handbrake off a little bit, and within a couple of years from today we'll start to see the benefit of that money flowing back around the economy. But for right now, that doesn't change the current position that we're in, which is Sydney and Melbourne are declining, Perth and Darwin are declining, other marketplaces in Australia are flat, and that is the next thing I wanted to talk about. Australia and the Australian property market, as a lot of the big news outlets would like us to believe, is not one market. There is no Australian property market. There is a series of states, pockets or areas within those states, capital cities, regional markets, and within each capital city there's the north, the south, the east, the west, the city centre, and even within those areas, for example, northern Sydney, northern Melbourne, northern Brisbane, there's literally a huge amount of suburbs that investors have to choose from. So when you start to realise that yes, Australian property prices or Sydney or Melbourne property prices are declining at the moment, you've got to really take a step back, because that is not the true reality of the market as a whole. And there are some markets in Australia, like your Sydneys, your Melbournes, your Darwins, that I believe are completely cooked right now for this stage of the cycle. Obviously long term, as wages increase, as property prices decline, as confidence comes back into those markets, the long term outlook over the next 20, 30 years could be really positive. But right now, they've all gone through ridiculous growth cycles above what they should have, and therefore they're all in the correction phase, which anybody that understands the history understands that when something goes up in value by 80 to 100% in 5 years, then there's normally a corrective phase for a period of time after that, which can last 12 months, it can last 5 years, in some instances it can just level itself out or decline for up to 10 years. So understanding your history is really important to make better decisions moving forward. There's also other marketplaces in Australia which have a lot of potential. For example, parts of southeast Queensland, particularly Brisbane, according to CoreLogic, have now been flat when you take out inflation, or actually more affordable to buy in 2019 when you factor in inflation than they were in 2008. But then when you overlay the last 48 years worth of data, the average annual increase in property prices in an area like Brisbane has been over 9% per annum. Even with the last flat 11 years, it's still increased by over 6% per annum over the last 20 years according to CoreLogic. So it's interesting, and it's a time to not get caught up in the hype, not get caught in the sensationalist media stuff, and really go, Australia is no longer one market, it's a series of markets and suburbs, and some of them are going to perform really, really bad in the next couple of years, and some of them are already performing extremely well right now, and it's a case of beginning to understand that. So one of the biggest advantages that I believe we have right now in the Australian property market is sentiment is horribly low, and that means that we've moved into the buyer's market phase of the cycle. Now, just because we're in a buyer's phase and there's less demand than there was a couple of years ago and there's more people sitting on the fences doing nothing, doesn't mean that you should go rushing into your local marketplace, because when you factor in the bigger picture and timing, it's certainly not the right time to buy Sydney or Melbourne, because according to a lot of Australia's leading analysts like PwC, KPMG, Heron Todd White, BIS Strapnell, Simon Priestley, these marketplaces are going to continue to decline into this year and possibly part of next year. Now, it's difficult to have confidence to go out and look at another area when the place that you live or that you own investment property is declining in value, but that is the reality of the marketplace right now, because a lot of Australia's marketplaces don't represent value this year or next year. So if you are thinking about something, it might have to be something outside of what you've thought about in the past. Now, a great way to get your head around that is to look at the Heron Todd White month in review reports, to look at the CoreLogic monthly housing market updates, and start to educate yourself, not just bury your head in the sand. Now, there are some negatives associated with the Australian housing market and the Australian economy right now. Obviously, like I said before, sentiment is very low. The number of investors in the marketplace has definitely declined. The number of first-home buyers in the market's declined. The number of property transactions has declined. The average days on market in a lot of areas has increased. You know, it's a bit difficult to get money. It is an election year. A couple of Australia's biggest housing markets that people had a lot of confidence in for the last 5 or 6 years are now in their declining phases, and that stuff freaks people out. And then you've got media bashing the absolute shit out of property for the last 2.5 years as well, and all of a sudden the herd has stopped walking in the direction of the easy money, which was the Sydney and Melbourne gains that we've seen, and the herd has started to be believing the hype that property is the worst investment and the Australian property market is going to decline and blow up and implode, and this is the decline that everybody's been waiting for. And you know, I do believe that Sydney and Melbourne are going to decline. I can see Perth declining a bit further. I can see Darwin definitely declining for a while further. But if you know your history, you know, you would know that this is a regular occurrence. And the thing with a cycle is there's an up phase, there's a flat phase, there's a down phase, there's a bottoming out flat phase as well, and all of these things happen over a natural 7, 10, 20-year cycle, regardless of the market that you're buying in. On top of that, you know, there's also some positive things going on in the Australian market right now. In the last couple of years, we've seen the Australian population grow by over 700,000 new people. We've seen unemployment rates coming down according to the Australian Bureau of Statistics. We've seen mining for the first time in a long time show a little bit of life and some signs that that particular industry might come back. We've seen some big government projects announced. We're seeing the budget, according to the Liberal government at the moment, fall into surplus for the first time in a long time, over 10 years, in the next sort of 12 months. We're also seeing signs of incomes increasing in some markets, with the incomes increasing in Brisbane over the last couple of years to the point where the average household income is now higher in Brisbane than Melbourne, for example. We're seeing people moving to different areas of Australia that we haven't seen for a while. There seems to be a strong exodus out of Sydney and Melbourne right now in terms of Australians moving into southeast Queensland. And then we've got a really strong influx of people moving to Australia, still going into the Sydney and Melbourne market. So it's one of those times where there's a transitionary effect happening. You know, what has been working for people, which was just buying Sydney and Melbourne for the last 7 years, is no longer working, and it's going to take a bit of time for the average Australian to get their head around that now that money is beginning to flow again, and that, you know, those marketplaces are still in the declining phase of the cycle. Now, the last thing I wanted to finish today's video with is my personal current approach to investing in property in this particular stage of the cycle, which represents a buying market in places like Brisbane, and are just sitting on the fence and waiting, you know, not thinking about it type thing, at least this year and probably next year for the people interested in the Sydney and Melbourne markets. Now, my approach is very much long term. I'm not interested what happens this year with my properties or next year. I'm interested in what happens over the next 15, 20, 30, 40 years on the investments. And you've got to start taking a longer term approach to investing than you have right now. My approach is also always, regardless of if things are booming or busting or sitting flat, is a very, very low risk approach. So in today's marketplace, I've exited out of all of my New South Wales properties in 2016-17. I've now begun to redeploy my money and capital into the Brisbane and Southeast Queensland markets, Brisbane and Sunshine Coast, North Brisbane in particular. I've been purposely working on a strategy that's a little bit different to what I was doing in Sydney. I'm only picking up houses now. I'm trying to pick them up at really good prices on big pieces of land. I'm really using my knowledge of the marketplace to use timing to its advantage. I know that Brisbane has been flat for the last 11 years, but in the last 50 years, I know that it's performed equally well as Sydney and Melbourne. I'm also looking at cash flow as a much, much more important part of my personal strategy. In the past, it was important, but now it is absolutely vital, which means I'm looking at things like houses and then building granny flats, or buying pieces of land and building brand new dual income properties, as opposed to just the old single income buy and hope strategy. I'm also buying properties and using or taking advantage of the current market conditions to buy properties with, you know, medium term potential for manufacturing value. So I'm buying, you know, good quality properties that are tenant ready, but then, you know, some upside in terms of a cosmetic renovation or the ability to add value through buying land at a good price and then building at a really good price and creating some equity that way. You know, I'm being very, very cautious and keeping money in the bank to make sure that I've got a buffer for a rainy day. I'm looking at all of the interest rates across my current properties and making sure that I'm taking advantage of current conditions where the banks are so desperate for business. They're happy to provide really, really strong discounts. I'm now starting to look at the principal and interest versus interest only conversation again. I've been principal and interest for the last few years because the banks made it that way. They were giving me a 0.5% to 1% per year discount, but I'm reviewing that with my accountant and my mortgage brokers at the moment. I'm trying to reduce the cost base across all of my properties as much as possible. And, you know, I'm just slowly beginning to understand other marketplaces outside of Sydney and Melbourne, and really looking at places like Brisbane and the Sunshine Coast with a lot more detail. Now, in terms of the suburbs and things like that that I'm looking to target, they're very high quality suburbs with really good household incomes, really strong DSR scores. I've seen the DSR scores in the suburbs that I'm looking at the moment go through the roof in the last 12 months. You know, I'm looking to take advantage of conditions by being a pre-approved buyer, as opposed to somebody that you know, an agent's a bit fearful of in terms of they don't have their finance in place. And I've just been really working on my team of advisors as well to make sure I'm not just doing this on my own, but I'm getting the opinions of 3, 4, 5 different people before I take any action. But for me, as always, ultimately what I'm working towards is financial freedom. I'm looking to create a passive income outside of my job and my business through property investing, which means taking a 15-year approach to slowly acquiring good quality properties with great cash flow, and then over time slowly working on reducing the debt across those properties so that I have better choices in my life in the future. I'm certainly not scared or worried about the current marketplace because I'm not investing in those high risk areas that are declining in value, that have already gone up by 80% in the last 5 or 6 years. What I'm doing is looking at marketplaces with long-term potential, not expecting anything from them in the short term, and then putting a plan in place for myself that makes sense for me based on my personal risk profile. So I wish you all the best in this current market. The next few years are going to be fun. for smart buyers. I believe that for Brisbane it is, or we're coming into the phase where it's a once in a decade buying opportunity where, you know, a lot of people are sitting on the fence and not thinking about this stuff. You know, people like Simon Priestley, KPMG, BIS Strapnell are predicting, CoreLogic as well, Brisbane to be one of Australia's top performing markets over the next 5 years, and to, as money starts moving back into the economy and people's confidence and sentiment starts improving again over the next few years once Sydney and Melbourne bottom out, to be a strong marketplace in terms of medium-term capital gains. But as always, who knows what the hell is going to happen? I don't know what's going to happen. You don't know what's going to happen. These guys talking about what's going to happen don't actually know what's going to happen. You know, protect yourself, take a low-risk approach, and, you know, if you're not in a strong financial position, this certainly isn't the time for you to be considering it. It's really for people that have, you know, after their deposit, a nice big chunk of equity or cash in the bank, that worst case scenario they can get through a hard or couple of hard years with. So good luck with it all. If you are seriously thinking about buying a property in the next, you know, 12 to 24 months, and you're open to having a conversation outside of Sydney and Melbourne, which we're certainly not looking at to buy for clients at the moment, I'd love to offer you a one-on-one complimentary strategy session where we can talk about where you are right now and where you'd like to be in the future, what's been holding you back, and more importantly, where the current marketplace is based on our analysis from people that just analyse markets all day. Now, some of that is positive, some of that's negative, some of it might sit well with you, some might not, but at least you'll be more educated after that session. So jump to www.pumpedonproperty.com and book that in. And if you haven't already, please subscribe to this YouTube channel where I share videos like this each week. Please listen to our podcast on Apple or Spotify, The Pumped On Property Show. You know, follow us on Instagram, check out our Facebook page and like us over there. Again, we share different types of content across all of those different things. But I wish you all the best. Stay safe over the next couple of years. And if you're in a strong financial position, let's continue the conversation about what I believe is a really interesting time to be considering, particularly Southeast Queensland. Good luck, guys. See ya.